Greetings all, Ben here from East West. I'm just going to take a little bit of a midweek look here at some of the uranium ETFs because I just think there's some battle lines being drawn here, and I think there's just some immediate areas that we've got to be a little bit, I wouldn't say cautious of, but certainly aware of, and we just want to keep looking to see how this is going to develop over the next week or two. To see if there's any sort of long-term implications for us with these uranium ETFs. So let's jump into it. So just start here with URA, and we're just going to take a look at what the volume's trying to tell us at the moment. So, you know, as we said, the uptrend is still firmly in place. But I'm just looking at this area and just thinking, well, you know, we've had a few goes at getting through here, and we've just sort of been backing off, and then obviously today we've just fallen down a little bit. Now, I wouldn't say this is immediate danger, but I think you just got to think about this now and just look at what's happening here just to sort of get yourself ready for any sort of adverse reaction that may or may not come. So, you know, to qualify that, tomorrow we could be doing this, okay, and all this is blown out of the water. And that overhead area up here still remains. We're yet to reach it, but there's no guarantee we do, of course, but we've just got to read the signs and just see what's happening in the short term. So the first thing I'm going to do in here is bring in a volume profile. So what I've got here is just a fixed range volume profile. So I've taken it from the bottom of the when the run really started, which to me is sort of mid-March, and taking it all the way up to the latest close. Now, what grabs me is this volume node that we've got going in through here. Okay, now this lines up with all that. Okay, so what this is starting to suggest to me is that every time the market's getting up here, it's running into some pretty good selling, because that's not a bad volume node. Now, this, to me, that just means that we're just running into an area where the market is starting to be supplied more heavily than it's being demanded. That's how I would see that. Now, when we sort of look a bit further back down, I mean, this becomes the next sort of volume node where there was a bit of business going on. And what can we see here? Well, that looks like it's just tying in with this little bit of structure sort of through here. So that remains obviously the next point of call. Now, what's interesting here is that we don't have any market acceptance. Okay, so if we just look at the lack of volume through here, you can see that there was no buyers through here, or no sellers. There was no follow through. We busted through there, but even this quick whip back up and down, there wasn't a lot of volume associated with this move. But I'm just looking at this, and that just looks like a building area of supply. Yeah, that's how I'd read that. And when I just look at the look at the recent run, I mean, you've got the same sort of phenomenon going on here. Not so much, but, you know, the points of control are a fair way away. So, you know, when you sort of look at this, you just sort of look at the areas of the main sort of teeth of the point of control, and we can just box that up. Now, if we just remove these volume profiles, it, you know, obviously it goes without saying that this area remains pretty crucial, and I would suggest, of course, that this is obviously the ultimate point of danger. But of course, we're a long way away from that, and we're still very much within the uptrend. I mean, you could probably even start to put together a faster uptrend there that you wouldn't want to see broken in the near future. But certainly the way these tops are coming in with that volume, it just makes me a little bit wary. And you might say, yeah, man, well, every week you're wary and the market keeps going up. Well, of course, I'm a trader. I'm always wary of you know, the unforeseen happening. And once again, I still wouldn't be getting off this train. For me, it still becomes about just having a mental plan in place. So if you see the market unfold unfavorably and you start to get, you know, movements back, that you're not panicking out. Okay, you're sort of mentally prepared to watch your profits sort of slip away a little bit in the expectation or hope that they're going to go even further. So sort of just saying blindly, oh yeah, this is bullish, going up. Well, I mean, it's your business. You can do whatever you want and look at it any way you want. But this is just the way I look at it. I just sort of look at this and go, okay, because I'm focusing on what's happening here in the near term. Only in so much as that the plan's in place. So if you do get the pullback, you're ready for it, you've got your plan set, and you're tactically taking the market on at where you think it might present good areas. Now, of course, any move down like that is going to drop us out of this trend channel. So, I mean, this red line, it probably gets broken. It's just a very steep short-term trend channel, but this one remains the key one. So, if we start dropping out of that, then you've got to start to think, okay, so what's going on here and what can I see on the larger picture? Now, I've drowned on about these Ichimoku clouds a lot, but the fact that remains that we're still out of balance up here, okay? We need some balance to come back to the market. You can see all the way through here, and even up here, where we squirted right away, we came back to the Tenkan-sen. So at some stage, either the market's got to pause for the Tenkan-sen to catch up, or we've just got to come down and meet that. Okay, and the gap here between the Tenkan-sen and the Kijun-sen is quite wide, which you can see is why the cloud's sort of thickening out like this. Now that's a good sign, because in the future, depending on where the market is, that provides good support, good strong support for the market going forward. Of course, that remains unforeseen, but the same thing remains. We are running hot there. And the RSI is telling us that. And remember, the RSI is not the be-all and end-all, but when we see it diverging like that, it's usually a decent sign that the market is starting to lose a bit of momentum, okay? And that's just what it's telling us at the moment. And in the past, this has been a good guideline. So we just we take all the information and we put it all together to make our case for what we think might happen next. Now, just in a daily setting, today it's just brought us back to balance, okay? So, there's nothing too untoward here on a daily, but, a big telltale sign will be, I think there's probably a little danger period through here, because the cloud's quite thin. It's not going to provide much cover. So, sort of coming in here into the end of the year, that looks to me like a bit more of a dangerous time where the market could breach the daily cloud. And we've been above it for quite. We had a daily cloud break back here in June, and we've subsisted above this cloud the whole time. So for me, I'll just keep watching this. Like I said, it's just another indicator, just a pre-warner. It's not the be-all and end-all. Not one thing is the be-all and end-all. It's just a combination of everything to give you a bit of confluence to think, okay, well, what could happen next? Where are my risks lie? What are the sort of areas I'm interested in? Now, I've just moved across here to Uranium, and it's a similar phenomenon going on here, where there's just looks like a bit of supply that's just come into the market. And now we've tested here, even though we busted this high, I'm just looking at the whole thing in a broad range and just lining it up with what we've got going on here. There's not a whole heap of market acceptance up here, not a lot of fresh buys, but it does look like there is a bit of supply coming through here. Now you can just see this is the same thing coming off the bottom of the run. So, this remains the next point of call, which obviously lines up quite nicely with these sort of lows that we had coming in here, is just a little bit of near-term support. And then, of course, the churn that we had through here has created the point of control. But something that's a little bit more disconcerting is even just from the bottom of the run that started in mid-October, that we've just hit this point of control, which is just inside this broader volume node. So this is where all the business is being transacted. It just looks to me like there's just supply going on in there. Okay, now that doesn't necessarily mean that the market's going to collapse. But it just means there's a battle going on here. That just looks like there's some willing sellers in this area. I don't know if they're taking profit or what's going on, but they just look like they're happy to sell out. Now, the bulls could defeat them and off we go. No question about it. But that hasn't happened as yet. So that's why we're just watching to see what's going on here. So we're just subsisting in this broader trend channel, but, that's not as strong, but that would just... this might become more prevalent if we sort of hit it and bounce off it, but that remains to be seen. So just this is not as important as the bigger one, I'd say. And obviously I don't have to tell you that remains key. However, when we look at this in a cyclical sense, I've just had this. I've just got to turn the moving average on. This quick little low that we got here below the 10-day moving average does lend itself, it's in the window, does lend itself to be a cycle low. It's not quite confirmed for me yet, but it's looking that way to me. I mean, to me, that's what I'm seeing. I'm just seeing that this looks like a cycle low in the right sort of time frame. I haven't confirmed it yet because this hasn't been quite definitive enough for me yet. But if this starts to fail below here, then the cyclical outlook starts to become one of left translated and failed cycles, which would mean that the top's in before we undergo a bit more of a correction. So what that would mean in a broad sense is that we had an intermediate cycle low here. You can see this is the lowest point. That this would be an intermediate cycle high, and that we're going to come in now, and that now we found our cycle high, that we're now going to come down to make an intermediary cycle low. Now, basis the way I'm looking at this from an Elliott sense, I don't think that whatever happens here is going to fail below this point. I can't see that. But this is starting to suggest that the basic swing pattern we've had all the way up here might be close to just rolling over a little bit. And so that is why I keep saying just be aware that at any time this could top out, and don't get caught with your pants down. Just have a plan. If you don't want to sell out here because you got a long-term view and you believe the thesis and you want it to keep going, no worries, man. But just all I'm saying is, if that's the case, don't sell out here. Okay, you've just got to be prepared for that to happen. Okay, because it could. Not saying it will. I'm just saying it could. Anything can happen. So with this one, I'm just waiting for the cycle to confirm itself. So if we start to lose this level, this low that we made just here at the end of the month, then I'm going to be a little bit more suspect on the future prospects of this. Now, just in an Elliott sense, I don't like the look of this. This is a very sloppy look. I don't know if I can make an impulse out of that. It looks pretty sloppy. So that makes me just, even though I'm cautious, I don't know if we've got a little bit more to go before we finish off this. But I point to this all the time. This and the Elliott wave oscillator, which helps us identify the top of 3, even though I think we've got a flat there, and where we think 5's coming in. It's just putting out these subtle signals that the market's just losing a bit of power. Now, this Elliott wave oscillator it's actually very simple. It's just the 5-day moving. It's the difference. The histogram represents the difference between the 5-day moving average and the 35-day moving average. So what all this is saying is that when we're at this point, the 5-day moving average was a lot further away from the 35-day moving average than we were at this point, even though we've made a higher high. Just looking at URNNJ, it's a little bit difficult with this one because we just don't have the same amount of history that we've got with the other one. So doing this is not quite as stark as in some of the other ones. There's not a lot of market acceptance up here. Compared to some of the areas that we sort of got through here, where there's more heavy volume, but up here we just look like we're trying to top out. So that I don't have to tell you that. I mean, that it looks pretty crucial just in the short term here. And even here, the point of control here is the obvious point here where resistance, even though it got a bit sloppy through here, became support. So this sort of area. I mean, it's pretty straightforward, right? I mean, this sort of area just remains the key going forward. I mean, you broaden that out a little bit probably there. I mean, that probably thickens it out too much, but this is the area where the business has transpired. So at the moment, there's just sellers here that have just supplied the market and are halting the run. But once again, all the same things apply. It's still, the main danger point still remains down here, and that's still a long way away. It's just that it'll give you a bit of advance warning if we started cracking through some of this area. But, obviously we haven't cracked it yet. So grain of salt. Now, same thing here. I've just worked out the cycles. And once again, this is a little less reliable because we don't have as much history to go off. But it looks to me like we're running roughly at about 50 days. But the problem is 50 days per cycle as an average. So the problem for me is that this looks pretty good for a cycle low here, I think. The RSI has run up here, just got above 70 again, but now we're starting to trickle away. And 40 obviously remains the key there. But the problem for me is with this, I think this looks more definitive as a cycle low because of the time that we took through here. But the problem is that this is looking like we're going to get a failed cycle. Well, it's not far away from making a failed cycle. And if we do that, it's going to be very left translated. And this box is not about the price level. This is merely time. I mean, I could put this a lot lower. this is just the sort of dates that I'd expect the next cycle low to come somewhere in here, just using the averages from history. So we just watch this, but just as always, we've got to be a little bit cautious there. And just finally, we're just looking here at the physical trust. And I don't know, this it just feels like a bit of a different kettle of fish for me because of the way it's just, because of the nature of the vehicle in terms of, the actual physical uranium, and obviously the spot price of uranium continues to rise. So the volume nodes here, I wouldn't have said are huge. Now, we did have a bit of a battle here, but this kind of looks like they've defeated them. So I don't know what that's going to mean for us in the near term, because this is where the market was supplied, and they've fought right back and busted through again. So we are still up the top here, and I don't know if there's a definitive amount of evidence as what I can see a little bit more clearly in some of the ETFs and the miners. And so I just come back and look at this on a weekly, and look, we've got a lot of time to go yet, but this, you wouldn't want this to become a shooting star. I think that the one caveat we've got here is that obviously we've got payrolls on Friday, and who knows how that could upset the apple cart. We just don't know. But just looking at this in an Elliott sense, I'd maintain that I don't think that if this is an impulse, which I believe it is, I don't think we've done enough on the other side to balance it as yet. Okay, so, we have actually just gone through the 100, but I don't know if you can take it off that. Yeah. We've had a very steep run. That's the only thing that gets me. We've run very, very steeply in this one. So that just, it just makes me a little bit wary. The RSI's just dribbling, but the other thing to remember with this is when it starts to dribble like this, and we are at a very high level, but when it starts to dribble like this, it just means that the market's still doing enough to maintain the momentum, but the momentum is not accelerating. Okay, so when we get to these sort of points, we just start to look at any of the markers that we might get. Now, this weekly is could be a shooting star, but we don't know. We won't know until the week closes out. And even if it is a shooting star, that doesn't necessarily mean that it's going to come off. It just becomes a warning sign. Okay, but this could be, like I said, I could be wrong about this being a 5 and then a triangle. It could be 1, 2, 3 and then a triangle 4, and this is the 5th wave, and that just means that we're going to get a pullback before we go higher. Okay. Now, that's not to say that we're going to pull back all the way to here. Okay, I'm not saying that we're going to get back there. We could. We might only get back this far. We might just do this. But just as a general sense, ignoring all the fundamentals and just looking at this just purely technically, that is what you'd be thinking about as a tactical sort of thing before the market goes on like that and goes even higher. That's how you'd be looking at it. So that's not a prediction that that's what's going to happen, or we're going to pull back this far. This is just a generic template. And I know you might say, hey, the fundamentals of uranium, there's a shortage of uranium. I've heard it all. I know what you're saying. I do think the market's going up, but nothing goes up in a straight line. There's always kinks in the road. And I'm just wondering if this is getting close to, forcing a kink in the road. This is bloody steep. Like that is an incredibly steep run. Just when you think about this from the bottom, we've gone 70% in 22 weeks, 70% up in half a year. So that's steep. At some point, the people are going to want to take profit, or I don't know. So something unforeseen happens, and the market will just correct. Now, like I said, it might only just want to come down and correct into this little bit, and that might be it. And then off we go again. So, there's nothing to say that it's going to topple. I'm never predicting that it's going to topple over. I'm just always looking for signs that we're going to. Anytime I see a market do this, I'm just expecting at some point it's got to just take a rest and come back, because just all markets do it. It's just the way I've seen it through everything. So, whether or not this is different, well, time will tell, but I don't think so. So look, that's it. I just wanted to just do that, just a little bit of a midweek update, just because I noticed those little battle zones being drawn up, and I just think they're kind of interesting. It's not becomes almost less about just being blindly slavish to uranium going up and more about just the being interested in the little ins and outs of the market and the little battles that go on between the bulls and bears, and just watching how the market and price responds to those little pockets of structure that build up. So let's just see what happens. It's kind of interesting, right? So I'll probably have a look at some of the uranium stocks on the weekend. We'll just have to see how payrolls goes once that flies by, and then we'll see where we sit. Okay, so thanks for watching. Don't forget to hit like and subscribe. We'll see you next time. Bye for now.